According to recent JP Morgan analysis, retail investors are playing an increasingly significant role in the stock market, accounting for between 20 and 30% of total US trading volume. And as market participants evolve, platforms are adapting to support new generations of traders. tastytrade is one of them, providing educational content and tools for active retail investors, as well as through its brokerage, allowing them to trade in stocks, options, futures, ETFs, crypto, and more. Today, we're chatting with founder and CEO Tom Sosnoff about his journey and the ups and downs of modern trading. Let's dive in and hear his story. Tom, brilliant to have you join at a time that it feels as though the market is just increasingly unpredictable. Before we get into the details, though, of how you and the team at tastytrade are helping others to invest, tell us a bit about how you got started in your trading journey.
I got started right out of college, actually. Now I'm old, so I've been around the block a few times. This is my 43rd year in this business, something like that.
Okay.
And I started right out of school, got a job on Wall Street, left Wall Street after about 6 or 8 months to move to Chicago to trade on the floor of the SIBO. And I've never looked back. It's been 43 straight years in this business.
And what got you there in the first place? Was it just one of those things where going to Wall Street was a calling? Was it one of these things where, you know what, you want to get a good job out of school? How did you get there?
I went to school in the late 70s, and there were no jobs for graduates. I was a political science major. I was pretty sure I was going to be working in politics or government. And it turned out my first interview was on Wall Street, and they offered me a job, so I took it. Never looked back.
You've had some really big wins and you've had some tough losses over the years. So before we start and we talk about the journey of the investor, tell us about one of your most successful investments.
Well, I mean, honestly, my most successful investments were, the businesses that we built. I started and built a company called Thinkorswim, which is still one of the most popular trading platforms in the world. And then we started and built tastytrade, which is also one of the most popular trading platforms in the world. So, I mean, from a success side, as an entrepreneur, I've done pretty well building financial software, building prop trading firms. It's kind of been, I don't know, I must have found something I was good at. So that part of my life, those are my biggest successes.
Talk to us a little bit, Tom, about where tastytrade is at today. What kind of scale are we talking about here in terms of number of users or the quantum of capital that is flowing through the platform now?
Tasty we're a firm where people go to trade. So we're a brokerage firm, but people trade here. We're the largest trading boutique pretty much in the world. Boutique. But we specialize in options and futures and futures options, crypto, all that kind of stuff. But people come here, people use our technology mostly to trade. We do about somewhere around 3% plus of all the customer volume in derivatives, which is a lot, actually. And we have, I want to say, the neighborhood of 500,000 customers, about $7 billion in customer capital. We make close to 1 million trades a day. At this firm, customer only, no professionals. So it's we're a pretty active firm.
And in terms of where you see your customers demonstrate the most interest by putting their money where their interest is, what are some of the names, what are some of the stocks that you're seeing the most either direct activity in or derivative activity in?
Well, we're not going to be that much different than the rest of the industry. So when you talk about in the equity world, I mean, Tesla and Nvidia are the two biggest option traded stocks. And then you get into ETFs. So then you have S&P 500, the SPY, the SPX, the Qs, IWM, things like that. But generally, it's kind of like the top 7 to 10 stocks, with Nvidia and Tesla kind of dominating the option scene. Occasionally, you'll get some earnings plays and you'll get some other players that will come in for a day or so. But for the most part, those two stocks kind of dominate, at least for the last couple of months.
It's interesting, Tom, there was an article in the Financial Times that cited a report saying that something like 70% of net single stock purchases made by retail investors are the Mag 7. And so with that level of concentrated activity, you've just referred to it in tastytrade, essentially, if Tesla and Nvidia are getting the most focused amongst your customer base. What is your perspective on signs that retail investors are not diversifying as much as conventional investing wisdom suggests perhaps they should be?
Well, here's the challenge, because it's not as easy as that. So the challenge for individual investors is, on the one hand, you would love to be non-correlated, completely diversified by strategy, diversified by underlying. Statistics show that diversification by strategy and underlying can reduce portfolio risk by 30 plus percent, in some cases 40, 45%. So there's a very strong statistical argument to be made for every type of diversification. The problem is a lot of people don't fully understand diversification because it's a little more complex than you realize with respect to correlations. And the other side to it is that you also cannot afford to sacrifice liquidity if you're a retail investor. So retail investors sometimes make the mistake of confusing the importance of liquidity with diversification. So the reason that people trade these top, let's say, you know, 80% of the trades are in the top, let's say 20 underlyings, including indexes and different equities, is because that's where the liquidity is. And when you're trading in the derivative space, you have to have liquidity in order to be successful.
Let's talk about some of the newer assets that have become available, not just on tastytrade, but more generally. Let's talk about digital
Sure,
assets and Bitcoin.
sure.
What's your perspective on Bitcoin
Well,
and the growth of crypto?
I mean, of course, I'm a huge supporter of all new products, including digital assets. I mean, we've been investing in the digital asset space now for as long as I can remember, in other companies and also in our own technology. I mean, Tasty has its own wallet. We support right now 14 different, as the SEC has kind of changed a little bit in the last couple of months, we're able to support more cryptocurrencies right now. And we support transfer in of crypto, transfer out of crypto. So we are pretty forward thinking when it comes to digital assets. We're also the second largest investor in a company called Zero Hash, which is a digital asset settlement company. We support multiple market making firms with respect to where we send our customer orders. I think we've been one of the leaders. I'm a huge fan of the technology that's behind digital assets. I mean, you know, we think we're going to head in the direction of tokenization on a much broader scale, to globalize tokenization over the next couple of years. So we want to be there, and we're pretty close to accepting stable coins as a way to fund your account. So I think we're on kind of the cutting edge of the digital asset space, and we've been involved pretty much from the start.
And what's your own personal view, Tom? And you can answer this either your own perspective or in your
Sure.
role as CEO of tastytrade. What's your perspective on certain digital assets that have effectively been called meme coins, where there's a disconnect between fundamental, valuation? It's inherently a difficult asset class to ascribe fundamental value to. But what is your view on meme coins and what that may be doing to investor appetite for Bitcoin and other digital assets, period?
I mean, personally, I don't own I don't own any meme coins. I own plenty of digital currencies, but no meme coins. I anything that anything that subjects a certain industry or asset class to people questioning the integrity of that asset class always scare me.
Mm.
I, I'm I'm a good faith person who believes strongly in the integrity of financial markets, and meme coins. I mean, part of it is I don't necessarily get it. I don't understand the attraction that much. I don't. I I sense more of a pump and dump game than I do, a real asset class. So I we tend to stay away from, as a firm, and we tend to stay away from talking much about meme coins.
Mm.
So from the perspective of Tasty Trade and Tasty Live, which is our network, we really don't touch much on meme coins. We support, I think, one or two total on the platform, but that's just from customer demand. We don't really talk about it. It's not something that interests us that much.
And what about meme stocks?
What about meme stocks?
Yeah, what about meme stocks? You said that which is an
Yeah,
interesting point, you believe in
similar.
the integrity, GameStop or
I mean,
BlackBerry. How do you feel about those?
It's a similar thing for me. The positive side of meme stocks, and this could be the positive side of meme coins too, is that they bring people into the game.
Mm.
So a lot of people that may never touch equities or touch derivatives or touch, cryptocurrencies are attracted to the game because of meme stocks and meme coins. And for that reason, that's the one positive. On the downside of meme stocks and of meme coins, it's it's not what I believe the future of finance is. It's not what I believe the future of investing is. It's too gimmicky for me. It's one and done. It discourages people. They lose interest quickly, after they get involved with that stuff. But again, it does attract people. It's a very good PR tool or marketing tool just to get people interested in investing. And for me, that is one of the biggest challenges we have
Mm.
is just, what? Let's increase the size of our audience.
Related to that note, because I get asked this question a lot, Tom, I'm really curious to know from your seat what you see. In terms of the demographics of your customer base, there is the stereotype that investing and particularly trading and active trading tends to skew male, um, tends to skew sort of a little younger. Is that reflected in your customer composition? And how do you think that the audience for investing, educated investing, can be expanded?
It can be, well, two questions there. The audience can be expanded by by a couple things. One is, you know, we need academia to roll over and to essentially embrace kind of what modern finance is,
Mm.
and they need to move off of kind of the old school, fundamental approach, the old school fundamental curriculums with respect to just what's taught at university levels, at everything. But we also have to embrace risk, and we have to embrace decision making, risk, and finance at a completely different level, which is why I do like the new technology that's been introduced by, digital assets. The challenge with young people is that they, in many cases, just don't have enough enough extra capital that they can afford
Yeah.
to and lose, or they really don't understand because of just kind of much more traditional impressions of financial markets, that being a self-directed investor is something that you should probably start at a very young age, because it will change wealth creation for you over the course of a lifetime. And unfortunately, the majority of trades and investments are made mostly, and you're right, it's mostly like it's male dominated. It's 40 to 60-year-old males and 40 to 60-year-old white males. And that's the dominating part of this business. We're seeing a lot more women get involved now. We're seeing a lot more younger people get involved. So the demographics of people opening new accounts has broken down to about a third, a third, a third, which is really good. But the majority, the lion's share of the trading is still in that older demographic group. So that's what we have to work on the most. It's going to take a cultural change
Mm.
of people just to start embracing risk and embracing decision making, embracing risk, and embracing this kind of new products.
It's interesting to hear you talk about embracing risk, Tom, because I think about your background as an entrepreneur. And I think about the kinds of companies and investing activity that gets a lot of mind share, and investing or running or founding early stage companies, the glamour of startups does seem to have captured younger people's imaginations. And so it feels as there is appetite for risk, but perhaps just not at the pace that you see in the public market. What do you think of that?
We've seen there's always interest in, I mean, now there's, different, there's undergraduate degrees in entrepreneurship,
Mm.
there's graduate degrees in entrepreneurship, which has definitely helped. The challenge for younger people, and in the world of, just speaking just strictly as entrepreneurs,
Yeah.
and in fact, I'm doing a giving a speech in a couple of in another week or two to a group of 800 high school students that are in an entrepreneurial program. So it's super cool. So there are, there's definitely a movement in that direction. The challenge for younger people is, it's it's not having the your full network in place.
Mm.
It's also difficult to raise capital when you're very young. And what we found is that, listen, we encourage it 1,000%. The success rates are a little bit lower, a lot lower when, with younger people, but we love the ideas. There's a gazillion great ideas. Executing something a little bit more difficult, but a gazillion great ideas.
Really interesting perspective on that, Tom. There's also a different kind of risk that I've at least observed is different between retail investors and institutional investors, and also access to what I'm about to present to you, which is the alternative space. Whether it's private equity, whether it's venture capital, some asset
Yep.
classes which have produced pretty good returns when you compare them to the public markets over the years. How much is your customer base at tastytrade coming to you and saying, we want access to this, help us find a way to be able to add this to our portfolio?
Although I do think there's going to be a movement towards more crowdfunding opportunities, and I do think there's going to be a movement as we become more decentralized over time. There will be more like reg crowdfunding offerings and
Mm.
things like that, and there will be more opportunities for retail investors. But right now, um, we don't get very much of that. We don't get very much demand for that at all. I mean, there's plenty of firms out there that deal with accredited investors and that deal with non-listed stuff and, OTC stuff and things, opportunities that mostly venture or private equity firms get into. We don't see a lot of interest on that. On the retail level, we don't see very much interest at all. And most online brokerage firms have a very hard time, getting into that marketplace because it's not as scalable for us. It's a regulatory nightmare on many levels, and it's difficult because we can't really offer accredited products.
Mm.
It gets sloppy, it gets dirty. So we kind of stay out of that space, and I think every retail firm really stays out of that space.
Talk to us a little bit, Tom, about another change in the retail investing arena, or just the public market equity investing arena period, which is the rise in 24-hour trading. The NASDAQ just announced that they're targeting 2026 to have around the clock exchange activity. The New York Stock Exchange has already sort of been there.
Yeah.
How does that change the game for retail investors?
Um, Anytime there's new products or there's any kind of expansion in the offerings, it's obviously something good for retail investors. Now, remember, we've had 24/5 trading in the futures world. We're the third largest futures firm in the US, and we've had 24/5 futures trading now for the last, decade and a half.
Mm.
So 24-hour trading is not something new because virtually every one of our customers has access to markets 24/5 in the futures world, futures and futures options. And in the crypto world, it's already 24/7. So those markets exist. What the SIBO, the NASDAQ, the New York Stock Exchange are all going to is 24-hour stock trading, which already exists today, but it's done a little bit off exchange. These are the exchanges finally doing it. I'm We're all in favor of it. We think it's going to be great. I think you'll see incredibly light volumes. I don't think there'll be a lot of trade, but just knowing that it's there and knowing that it's accessible electronically, it's a great thing to have. I think the top 20 stocks will have a little bit of liquidity. The top 5 stocks will have enough liquidity. It's going to be hard to move options into that space, and it's going to be hard to find really good market makers that want to go, 24 hours a day.
But just to challenge you a little bit on that, Tom, one of the hypotheses out there is that retail investors are disadvantaged by information asymmetry, that very sophisticated institutional investors perhaps have access to better information and they have access to it faster,
Yeah,
and they have the technology to act on it more
I
quickly.
completely disagree.
Dude, tell me
I,
why. I
I
love that. Tell me why you
I
completely disagree.
completely disagree. First of all, institutional investors, they don't have the technology. The technology on the retail customers, the technology for retail investors absolutely blows away the technology for institutional investors. Now, I'm not talking about high frequency firms. Like high frequency firms, obviously they have great
Yeah.
technology, but the retail investor technology that you could use, that I use, that any customer in the world can use, blows away any of the institutional technology that's available today.
What's a
And as
specific
far as
example of that? What's a specific example of where it's superior for the retail investor vis-a-vis the institutional one?
I'll just use tastytrade. Tastytrade is built on high frequency middleware. Our execution times are about I don't know, 23 to 25 milliseconds. The average institutional platform is probably still in the 5 to 600
Mm.
millisecond range. And the front end technology they have and the feature sets they have can't even compare with what you can do on a retail platform. We can route to any single marketplace with any strategy, with any combination of spreads. You can do anything you want strategically in any single product. You can't even touch that on an institutional level. It doesn't even exist because the clearing firms can't handle it, and the front end technology is all old and legacy. So no, it doesn't. It doesn't exist. The retail investor has lower rates and has better front end technology and has access to more marketplaces and access to more strategies. And it's not even close. And then the second piece you said, which was on the information, it depends how you view information. I view traditional financial media and that information as having no value at all. And I look at the information like the hundreds of thousands of hours of content that like think tanks like us produce, helping understand how to optimize strategies and optimize the approach to investing as so much more valuable than anything else that the institutional side has, that I don't even think of it as a comparison. And then lastly, individual investors can do whatever they want to do because they're small enough. So they have access to every single marketplace and they can trade in any product that they want and do whatever they want because their trade size is very small. Institutional investors are limited to only the largest, most liquid underlyings that have enough volume and that are able to facilitate their trades. So their universe of trading vehicles is tiny compared to retail investors. So the retail investor to me has every edge in the world except against like the high frequency firms who are actually the market makers.
And against the high frequency firms in a 24/5 equity trading environment, looking into your crystal ball, do you think this shakes anything up what NASDAQ's set to do?
I don't think it shakes that much up because those firms, I don't think that the firms making markets 24 hours a day really are that. I think everybody's doing it as a convenience because it's good for the business. And so I think I think it's going to be challenging for everybody because it is very expensive to staff 24 hours a day. It's very expensive to make markets 24 hours a day. And it's very expensive when you have nowhere to lay off those trades. See, during the regular trading hours, you can lay off the trades on many different marketplaces. And essentially, this is a game of scale, right? The whole high frequency game, the whole market making game is all a game of scale. And when you don't have scale, which is in the middle of the night, things like that, it's much more challenging. So I think you can learn from what the CME has done the last 20 years or so, and what the Bitcoin market makers have done. It's challenging in the overnight sessions. So really what you want to do is you want to survive and then wait till the market's open. You're providing a service and a convenience, and you're essentially you're supporting the integrity of the entire business. And that's what's important. That's why they're doing it.
Tom, we're going to round out now with some rapid fire questions. So we've got 3 coming at you.
Fire away.
The first one is, if you could hold only one stock for the rest of your life, which one would it be?
I did not think you were going to go there. Of course, we're publicly traded, but I'm not going to say our own company. If I could hold one stock, which stock would it be?
Yeah.
That's really interesting. You're absolutely going to despise my answer.
I would never despise your answer. What you got, Tom?
You would have, if you could only buy one stock, you would have to buy a broad-based index. Like in other words, because every single other industry is going to be disrupted, or they're going to be, they're going to be disrupted, or there's going to be rotation.
Mm-hmm.
And I don't like any specific individual stock for the rest of time. Like if I had to buy something for the rest of time, I would buy an S&P index. If it was for the rest of time. I don't do that though, but that's not how I trade.
Yep.
But if I had to, that's what I would do.
Second question for you. What is the single biggest downside risk to the US equity markets right now?
The biggest risk right now, and this is a risk we haven't faced in a while, but the biggest risk is just we have a very dysfunctional political situation in America right now, and we burned a lot of bridges that took a long time to build. The risk, the biggest risk to our equity markets is that we lose our leadership role. And America is the US markets are the single greatest pool of liquidity in the whole world multiple times over. The biggest risk to our markets is that we lose our leadership role as kind of the king of liquidity, and we lose our leadership role as being the place where everybody goes to essentially raise capital and to raise capital to build new companies and to take their companies public.
And the last question for you, Tom, what is one company other than your own, so tastytrade is not a permissible answer, one company you look up to other than yours?
Oh, I have a lot of companies that in my mind I really respect as both entrepreneurs and the way they run their business and stuff like that. Um, I've always loved Uber. I know it sounds crazy, but I've always loved Uber. I've always been a huge Costco fan. Um, I mean, I have to respect certain companies like Nvidia, and some of the things that they've done have just been, incredible. But if you really want to talk about companies that where I love the entrepreneurial side and some of the ways that they've changed, you know, my life and things like that, I kind of always put in, if we're looking over the last 10 years or something, Costco and Uber would be my two top.
And last question for you, last question for you this time, Tom. What's the worst investment you've ever made? You talked to us about the best one, top of the show. You talked about investing in the businesses that you have founded and built. What about
Sure.
one that didn't work out so well?
Well, I have a lot that didn't work out so well. So one of the things about risk takers are, I actually did a speaking tour across America for a whole year that I called it the Bad Trader Tour, and I talked about all my bad investments because I had a streak of about 40 in a row that didn't work out. Like private investments, just places where we invested money. Um, I would think that it's a combination. For me, it's a lot of venture deals. So let me just explain for a quick second. Because somebody took a shot with me when I wanted to build businesses, I have always felt that an obligation to
Mm.
do the same with young entrepreneurs, young traders, things like that. And so I have probably made 40 or 50 investments where they've gone from some number to zero. So I have a ton. Worst investment ever would probably be a restaurant, a WWE wrestler, um, an oil well in Texas that didn't exist, a gas well in Oklahoma that didn't exist, things like that.
Yeah.
So lots of investments, a real estate building, that burned down, we got no money out of, things like that over the years. I've made lots of bad investments. I wear them as a badge of honor.
But of note, none of those, none that you cited actually publicly traded investments. So perhaps in keeping with what we've been talking about today. Tom Sosnoff, founder and CEO of tastytrade, thank you so much for joining. Appreciated all your insights and your time. I'm Anne Berry, and thank you for tuning in to After Earnings, the show that brings you up close and personal with the executives behind the world's most interesting publicly traded companies. If you learned something today, don't forget to like, subscribe, and share with your friends. Upcoming episodes will feature CEOs and CFOs from companies like Adobe and Roblox, so do come back, and we'll see you soon.